Welcome to the It Takes a Village podcast by Village Bank, where we bring leaders with expertise in finance, accounting, entrepreneurship, leadership, and branding into our village to help entrepreneurs like you in our community. As an entrepreneur's bank, we hear all the time that you want to know more about the financial nuances of starting and running a business. These questions are profoundly important and can be incredibly stressful. That's why we're inviting prominent leaders and friends of our village to weigh in and build a village of answers and connections on the It Takes a Village podcast. Thank you for joining us. Today we're talking to John Dierkhising, co-owner of Bottom Line Accounting, about how your business numbers can tell a story that leads you to make smart business decisions. If you're in recovery mode or you're ready to seize an opportunity for growth, his advice is to know your numbers. This episode was recorded during a live webinar event.
First and foremost, what I know about entrepreneurs, since I get to work with several of them, is you didn't necessarily decide to be an entrepreneur because you want to stare at numbers all day and crunch them. You really became an entrepreneur because you have an idea, whether it's a service or a widget or whatever it is, but you want to figure out how to get that out to market and how to do it best. With that being said, it takes money to do that, right? It takes time and energy to do that. And so if you don't have the capital, if you don't have the liquidity, and if you don't have the process in place, you're not going to be able to do that no matter what the business is. So we just want to make sure that, we're able to help you guys on how do you get capital? How do you sustain liquidity? And how do you make sure you're ready for that next idea, whether it be a service, widget, business, etc. As business owners are executing a pivot plan and strategizing what the rest of 2020 looks like, what financial statements and indicators are important to pay attention to?
What we're looking at is working capital, and that's a lot of people focus on the P&L, profit and loss statements, or their income statements, which are important. I mean, you got to, at the end of the month, want it in the black, but ultimately it's your working capital, which is your current assets divided by your current liabilities. We want to make sure we have a healthy balance sheet. And like I mentioned earlier, some of that's kind of skewed right now because we have these big PPP loans sitting in the liabilities, or people should have it sitting there. So it's kind of skewing that. I want to see kind of, how things look after that, but we're kind of keeping an eye on that. That's going to help. It's going to help determine, it's how far you can kind of, if stuff kind of hits pause button again, and there's no PPP sort of bridge loan type function again, gives you an indicator of kind of how far out you can kind of operate. So certainly you want to look at your, working capital, current assets divided by current liabilities. And that would be our main one right now. Other than profitability and margins, I got a lot of clients that are having, really good months right now. So it's kind of a weird scenario. There's a lot of nervousness out there, but I will preface this. A lot of my clients are what I'd consider supply chain. So they weren't really shut down. They were, maybe slowed. Early on, they had a huge backlog, and some of that is, I've noticed dropping some. So we do look at their sales order backlog. So they're looking at, okay, I have 2 months worth of orders right now. I have a month and a half worth of orders, that type of thing. So, but yeah, I think, it's been a kind of interesting last couple months, to say the least. So
we keep hearing the world is coming to an end, and it's not. Will it look different? Yes, it will look different. Just like the next year and the next year, it's going to look different. But where is the opportunity in that? And our clients are really finding the opportunity in that. One piece I'm seeing, and John, I don't know if you're seeing this too, is the clients, like I've got some manufacturers that just hit it Q1 and 2, and they were busier than ever, and they hit it. And what they're seeing now is they didn't have a second to pause. What they're seeing now is their orders are down for Q3 and Q4. So they're starting to they're like, okay, wait a second. So they may be over budget or right on budget, but they're predicting, I've been hearing like 30%, 40% drop third and fourth quarter. So that's something to be thinking about, that if you didn't feel it first half of the year, what, are you reaching out to your clients to see what third and fourth quarter look like? And I would recommend that. I would recommend you start having those conversations, whether it's your business or your clients' businesses. The other thing I'm seeing is those clients that were like, oh my God, I can't do business now. They actually plan through technology, through pivoting what they do today, how they provide their service or their widget. They're ready. Like they are ready and they're catching back up quickly. And so I think you're really going to see kind of that play on who was not impacted and who was impacted right away. And how are we going to shift to think about how we're going to do business differently into 2020 and beyond. I also, I think it's important to have those conversations up front, whether it's your business, your team, or the people that you service. I always say call a competitor and ask how they're doing too. I have a lot of friends in banking, a lot of great community bankers in Minnesota. And you know what, we're all in this together. So I would also encourage you guys to reach out to your buddies you went to school with or your neighbors and ask how they're doing, because I always think sometimes the best way to figure out what's going on with your business is to watch other trends and see how could that impact you. Because, I do think we're going to go into a recession. I don't think COVID is over. And yes, that sounds negative. It's not. We have to look in front of it and say, how do we anticipate that and how do we prepare for that? I think what's more important than, redoing a budget quickly and going, oh, we're not gonna be able to do it. What's your strategy? What's your 10-year strategy? How is the chaos working for it and working against it? But how do you stay focused on that, in our case, 10-year strategy, 10-year numbers and 10-year plan that we're working towards. We're all smart people. We all have our jobs for a reason. And so what do we know about our business, about our clients, about our products or our services? And how do we make sure that that is what we focus on, and that's what we focus on educating our clients on? It's a great product for you right now, and this is how you can implement it. For us, it's SBA. We know the government's going to continue to throw money at small businesses. They're going to continue to guarantee that debt, whether it's at 70% or 100%, which I think is coming. And they're going to look for ways for us to continue to lend to Main Street and keep everyone employed and keep businesses running. And so for us, it's how do we continue to push that product out there and share with our entrepreneurs that this is a great product for your business, because it's government guaranteed. There's different parameters around it in our capital versus a conventional loan right now. So it's, know your business and be confident in what you do and confident in what you sell today. What would you recommend to business owners to reorganize financials and remain organized through this shifting time?
Well, if hopefully their financials are in decent shape, meaning, things are reconciled on a regular basis. I know we reconcile the balance sheet, so it starts with the, cash recs and works down through the liabilities. So I would, if that's not happening on a regular basis, it needs to. So certainly stay on top of that. Depending on, if you had various profit centers and things like that, or even cost centers that you were reporting from a profit and loss standpoint or income statement, those might need to be adjusted depending on if certain, products or I don't know, whatever profit centers you would have, maybe got shut down or got adjusted, things like that. I would kind of review, but it's just identifying where, like we mentioned, the backlogs are sitting. That's an easy indicator, especially if you're in an order-based type function. If you're in a construction type function, kind of how many quotes you have sitting out there. We kind of look for proposals or quotes, and we usually base it off of like some sort of close rate, so we can get an indication of kind of what our, forecast would look like. So those are things I would kind of focus on or suggest having in place if you don't have that in place. A lot of small business clients, they might have their own, maybe not the financial statements they're basing stuff on, maybe their own Excel spreadsheets and things like that, but we try to incorporate, some of your planning within the financials if you can. And it just takes them to be up to date for one and be organized and accurate for two. So I would just take 2 minutes to look at them. I can't tell you how many clients don't actually look at them. Just look through them, ask questions, maybe figure out what's in this bucket, what's in that bucket, so you kind of know where things are at. Just maybe have a little bit better pulse on things, if anything. At least while we're in this like stretch, have a a lot of times it's like, oh, you guys are taking care of that. Well, you still need to look at it. I'm not going to know everything about your business. You got to look at the financials, ask questions. There's times we're putting your class coding things that you might not want in that bucket or whatever, but you never ask. So it's like, I wonder how many times people are looking at them. So I would just, take a few minutes out of your day to review the month end if you haven't been doing that, just because somebody else has been compiling the financials. So.
Look at how the numbers affect each other too. I always find that really fascinating. One of our directors at the bank, who's in a completely different industry than us, right? He had shared these income statements and balance sheets with us where, it looked at a percentage. So this income statement, when you look at the revenue, it's a percentage of revenue. So we can look at all our different line items. And then expenses, it's a percentage of expense.
Sure.
And compare, 3-year average. I get really dorky when it comes to numbers, but it's like I could do a 3-year average, I could do a 5-year average, I could look at year to year, month to month, etc. And it really tells you a lot, because the bigger the numbers, then when you start to see a 1% or 2% or God forbid 5%, you're like, what is that all about?
Yeah.
Or if you want to grow a certain bucket of income by 5%, 7%, you can start to see that, and how much you need to do monthly or quarterly, depending if you're a seasonal business, to hit that goal. Look, 10 years, where do I want to be? What is my one goal for 10 years? And then watch how your numbers affect that monthly, and please read your financials. I can't tell you how many cool things you can learn about your business. And you can, if Dana complains to me about something, I'm like, oh gosh, Dana, really? But then I look at the numbers behind why she's complaining, and I understand how it affects the business. And I'm like, yes, or if she's happy about something, we can celebrate it, because we can see directly where it shows up in our numbers. Your numbers tell a very specific story. And whether or not you like them, they're reliable. They don't lie. They might tell a story, but they don't lie.
Yeah, I'd like issuing clients a 2-year. So what that will give you, and if you're not getting this, request this or try to, print it off on your own, but it gives you a 2-year, which will give you this month versus last year's current month. So especially if there's different seasonal aspects of things, and then this year versus last year, year to date. So it gives you, and then when you have the ratios to income, you can really quickly just get a side by side. It's like, oh, why is our advertising, way over last year's number? You can look at a 2-year, not just year to date. I'm talking like current month versus last year's current month, and then year to date. You can really get a quick idea of where fluctuations would be if you kind of request that. The other thing I would say from a, profit ratio, we try to look at 50, 30, 20 models where industries allow for that and markets allow for that. So what I mean by that is 50% gross profit, 30% overhead or operating expenses, and then a 20% net income. So when industries and size of companies allow for that, service businesses for sure should be hitting that, in my opinion. That gives the owner a 20%, profit at the end of the year after all is said and done. You can decide from there, you want to reinvest 10% back in, put 10% in your pocket, or we can just do stuff off of that. But if you're not looking every month at 50, 30, 20, why are we not at 50? Why are we not at 30? Thus we won't be at 20, right?
What numbers are banks going to be looking at in the upcoming 6 to 12 months for financing approvals? This is interesting. So there's this, and this is why, I'll put a plug in for Village Bank and any other community banker out there. Right now, there's a lot of banks that have kind of said it. We're not going to lend right now to under 5 million. We're not going to, in real estate, we're not lending to specific industries. We're not lending to, I've heard some that aren't going to be lending to nonprofits until they understand what the financing is going to look like, or the government funding is going to look like going forward. I've heard the real estate piece. I've heard the under 5 million piece. And I just ran into a very dear friend of mine in banking, who's told me all he's doing is golfing because his bank won't do any deals right now. I was like, good for you. Like, right? I'm going to go call on your clients.
Yes.
It's, it is what it is. And I think it's, every business owner has to make a decision, or a shareholder for some make decisions on where they're willing to take risk and what they're willing to do and how they're willing to support their clients. And since we're in a unique situation, and I think most community banks feel this way, is, our job is to support the local entrepreneur, and our job is to support Main Street. And we put relationships first. So I would say personally, as well as for the bank, it's the last time that you exit the market. I mean, this is when your clients need you more than ever. And I think anyone that's passionate about what they do is not going to back out now. I think all of us in banking that really care, we're, doing PPP loans at 2 a.m., right? Because that's just what you do. And so what I would say is that, so what banks are looking for in the next 6 to 12 months, I think John hit on the head. You're always going to want to have cash flow. Whether it's that service industry that depends heavily on cash flow, and your collateral happens to be receivables or technology or widgets or whatever, you're going to depend on that cash flow. I also think it's the same, even if it's real estate investment or owner occupied. Do your leases provide enough income to make the payments? Has anyone bailed on a lease? Can anyone not re-sign? What's going on there? Or owner occupied, does the operating entity provide enough cash flow, continued cash flow, to support the debt structure for the building? So I think cash flow, cash flow, cash flow, cash flow. I also think, from my perspective, I always look at management. Like, do we know and understand management strategy? The guy yesterday where he's like, listen, I don't like taxes. I don't pay taxes. He's always going to pull out. He's going to pull money out. He's going to find other ways to reinvest in Q4 in equipment, in technology, and in people. He will always do that. And we can look at his numbers again, what John was saying, a couple of years of numbers, and you see that same pattern. And so knowing him and knowing that's a strategy is important. So when we get to the bottom line and we're like, why isn't he following that 50-30-20 rule? Well, there's a reason why he is following it. He just has a different model, right? Where the one-time expenses he's having. I think, so I'd say cash flow. So I'd say management strategy. I think management strategy is so important to really understand where they're going. It's interesting because I think you brought it up, where it's such a great time to be innovative and in the company and take out debt right now, which is 100% true for, people like you and I, who we're young, we're aggressive, we're ready to go and do it. But you also have these business owners that are maybe 66 years old, and this was their last year or two. Yep. And they're like, wait a second, I was, on my way out, and now what do I do? And so, I would even say from that perspective, you don't necessarily have to invest in the business and look for a new debt strategy to buy that technology, whatever, but you do have to do something, because business is changing, and the value of your business is not going to be the same if you just sit on your hands and you don't do anything. And that's, again, where being really honest with your banker. I mean, bankers are great either way. They're going to say, yeah, let me help you ride out the next 20 years and grow your business. We're also going to say, okay, you got an exit strategy? Great. Now, how do we help you find the person to buy it, or bring someone up from the team to buy it? And by the way, we want to finance that. Yep. So I think really being very clear about what your expectations and plans are, and using the resources around you to get there. Confiding in an accountant on, okay, this is what my plan is. But by the way, I've always deferred, and now what should I do? How do I get out of this, right? Yeah. From a business and a personal perspective, because for most entrepreneurs that we work with, it's all, they're entrepreneurs. It's them. Maybe they have a couple partners, but it's them. And so how can we make sure that we're limiting the risk personally and professionally, and you're able to go? But if you can't sit still. I want to be so clear on that. I think there's more danger in just sitting still and pausing than there is in even maybe making the wrong move right now. Because at least the wrong move is moving, and you're going to bump into something great. I really believe that. I think it's worth spending money on being prepared all the time, because once you're prepared, you're there. I mean, you can take opportunity or you can mitigate risk. And I think it's just making sure you're working with a good accountant, you're working with a good bookkeeper, and you're working with someone that knows the rules, because it's just like banking, right? You want a banker to go through your income statement with you and help you walk through your expenses and what financing works right for you, whether it's a 3-year or a 10-year, or should you refinance, should you not refinance, do you need a line for capital or not? And I think it's really making sure that you're working with an expert. And that's the thing, like, I feel like in times like this, when cash flow gets tight, everyone cuts marketing, everyone cuts consultants, everyone cuts all of those things right away. And I tend to say, whoa, where are we at, guys? And where are we focused? We're focused on driving SBA. So, cutting marketing that's focused on SBA probably doesn't make sense. Or, where are we focused as far as whatever your business model might be. But that's where you really need to double down on it and make sure you understand the numbers behind it, that you can afford it. But you've got to double down and make sure you have some experts there that are helping you through it. I mean, it makes sense to always have that detailed numbers person beside you, because then, you're both using your strengths.
Yeah.
It makes sense for the business, because if you got to have the revenue, but you got to understand the revenue, and are you really making money, or
Yeah.
that expense behind that revenue, right?
I get a little worried taking on new clients if I find out the owner was doing the accounting, and it's like, well, you need to be the one driving the business, bring in the revenue. This is not probably a good use of time, but they want to be kind of more in control of things, which then creates, other things like, growth gets to be difficult because everything passes through their desk type thing. Anyway,
Absolutely.
So, they need to be out there driving new business or maintaining or getting an idea of their current business situation. So.
Absolutely. And that's hard to do when you're, when you go from a small business to it's kind of this next step where you have to start to let go of things, but it's all about trust, and it's all about making sure you're, hiring people that have the same values of the company. So they care about the same things you care about, but letting go is tough, right?
No, definitely.
John, thank you so much for always helping us out. And you're such a good guy, because you care so much about our community, and you know the numbers, and that's important. And so I appreciate you taking your time today.
Thanks for joining us on It Takes a Village, hosted by Alicia Webb. If you liked what you heard today and want to hear more, follow us on social media at Village Bank Online on Facebook and Instagram, and Village Banking on Twitter.